Welcome again to our session. I am your instructor, CPA Ringo Frederick, and in our today's class is a continuation of what you were doing earlier on. So today we are going to introduce a new concept. Remember, when you introduced branches, we mentioned that we'll be having three types of branches. These are dependent branches, independent branches, and foreign branches. So far we've covered dependent branches. We've looked at various scenarios on how we can deal with dependent branches. In our class today, my good students, I want us to talk about independent branches. What should we always have in mind anytime we are talking about independent branches? Like dependent branches, where we mentioned that they were not maintaining their books of accounts, meaning that everything was being done in the head office. You will find for independent branches, they are going to maintain their books of accounts. Meaning that, as at the end of the day, the dependent branches in the head office, they'll have to prepare their own financial statements. But as at the end of the day, you'll find that they are going to be combined to give what? To give the statements of a company as a whole. That's a very key concept that we should understand. As much as they are maintaining their own sets of accounts, but as at the end of the day, you will find that all these accounts, more so when you are preparing our financial statements, they are going to be combined because it is one entity. It is one entity. So that's the main difference with independent. Where dependent, they are maintaining their books of, they are not maintaining books of accounts. For independent, they will be maintaining the books of, accounts. They will be maintaining their books of accounts. So to this point, I want us to look at some of the books that we'll be looking at under independent branches. Books to be maintained, and in this case, we'll be looking at the books to be maintained will be as follows. Talk about books to be kept, books to be maintained under independent branches, books to be maintained under independent branches, books to be maintained under independent branches. We will be talking of the following books, my good students. The first one we should be talking about, because as at the end of the day, you'll find that at times head office might send goods to the branches, or rather many a times head office will be sending these goods to the branches. So the first account that you must always have is good sent to branch. So in this case, we'll be talking about the goods sent to the branch. Number one book we'll be talking about is the goods sent to branch. The goods sent to branch. So what will this entail, my good students? This will entail the reported values by the head office, but are not included in the sales of the enterprise as a whole. We are saying that these are reported as values by the head office, but are not included in the sales of the enterprise as a whole. So you find that, yes, in this case, I'm going to report as the head office, but ideally not to be included as the enterprise as a whole, because for the enterprise, you'll find that we are going to combine all these elements. So the first book to maintain is goods sent to branch, The other book that you're going to maintain is goods received. Goods received from the head office. Goods received from the head office. So this is what you should have in mind. Goods sent to branch, this one is going to be maintained by the head office, right? Whereas goods received from the head office is going to be maintained at the branches, because we mentioned that the independent branches, they normally tend to maintain their own sets of accounts. So you'll find that this forms part of goods available for sale in the branch. They form part of goods available for sale in the branch, but should be excluded in the goods available for sale for the business as a whole. So the main idea here is that, my good students, what you should understand is, anytime you're talking about goods received from the head office, first of all, they are being maintained at the branch, right? So that as at the end of the day, they are going to form part of goods available for sale, in this case, for the head office, right? but ideally it is not entirely for the whole business as a whole. And that's why you said these forms part of goods available for sale in the branch, but should be excluding the goods available for sale for the business as a whole. That is very key for us to understand. Then a new item that you're going to also introduce here is goods in transit. 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 So anytime you are looking at goods in transit, my good students, we are looking at goods in transit. They are not part of the closing stock of neither the head office nor the branch, but are part of the closing stock of the enterprise as a whole, meaning that we're talking about combined business. Why are we saying like that? Look at this concept. These are goods that we are transferring, maybe assuming that my closing period for branch, assuming you're looking at branch here, and I'm looking at which the goods have been sent. Say like the closing period of the branch is say like 30th, say 12, 2020, or rather 1st December. Talk of that 1st December 2020. Then these goods, probably the head office will send these goods. Maybe they'll send these goods on 29th December. But receipt or these goods will be received on 31st December 2020. The goods were sent on 29th. By the time we were accounting for our goods in branch, these goods had not yet received. They were not yet received. So you'll find that these are what you're terming them as goods in transit. Yes, they have been transferred from the head office, but they have not been received by the time we were closing our books. So we are saying that it will, at this point already, it has been shifted, or rather it has been transported, it has been removed from the head office accounts. At the same time, it has not yet been received in the branch inventory accounts. So ideally, it is not on either of the inventory accounts of the head office or the branch. But when you are looking at it entirely as a business as a whole, it is in our business. This inventory is going to be accounted for when you're combining the business combination, because either way, it is for business as a whole. But in this case, you'll find that it has been transferred, or rather it has been transported to the branch, but it has not yet been received. So in such a case, you'll find that this is what you're terming them as what? As goods in transit. This is what we're looking at it as goods in transit, which you should have in mind. That's why you said, as at the end of the day, they are not going to be accounted for either under branch or head office, but when you're looking at it as a business as a whole, they are going to be taken care of. They are going to be taken care of. That is goods in transit. Then you're having another element known as provision for unrealized profit. Talk about number 4, we'll be looking at provision for unrealized profit. Provision for unrealized profit. Provision for unrealized profit. Provision for unrealized profit. So anytime you're talking about provision for unrealized profit, my good students, what should you understand? What should click at the back of your mind anytime you're talking about provision for unrealized profit? Provision for unrealized profit, basically, you'll find that this aspect of unrealized profit will arise where the head office sends goods to the branch at cost plus markup. At this point, the head office will send the goods to the branch at cost plus markup. So after you send these goods at cost plus markup, probably as at the end of the day, maybe this inventory are still there. The goods have not been sold. So the profit attached to these goods that have not been sold, this is what you're terming it as what? As unrealized profit. The profit that are attached on the goods that have not been sold is what you're terming it as what? As unrealized profit. And in such an event, whenever we're having such unrealized profit sold up in closing stock is considered unrealized, is considered unrealized, is considered unrealized. until the goods are sold. Until the goods are sold by the branch. Until the goods are sold by the branch. The unrealized profit on closing stock should be provided for by debiting our head office profit and loss account, and we are going to credit our branch current account. So key thing that we should understand is that anytime we are talking of unrealized profit, these are profit, or rather it will arise when the head office has sent the goods to the branch at cost plus markup. Then probably as at the end of the period, this stock are still there, meaning that the profit attached to this inventory is what you're terming it as unrealized profit. And to account for this unrealized profit, my good student, you're saying we are going to debit our profit and loss account because it's kind of an expense on our side. Then we are going to credit our head office, or rather our branch current account. You're going to credit our branch current account. You're going to credit our branch current account. So that is also another account that you normally tend to maintain, which in this case we've said it is known as what? Provision for unrealized profit. Number 5 account that you must also have in mind, we will be talking about this account known as what? The current accounts. We'll be talking about the current accounts. Very key for us to understand. We'll be maintaining accounts known as what? The current accounts. And how are these current accounts important, my good students? The current accounts will come in play in that you will find that the branch current account balance, because you'll be having 2 accounts. This is branch current account and head office current account. So branch current account, it will be maintained by the head office. Whereas the head office current account, it will be maintained by the branch it will be maintained under the branch. So we are saying that the branch current account balance represents the head office investment. Listen to that very careful. We are saying that the branch current account balance represents the head office investment in the branch. The branch current account balance represents the head office investment in the branch, and thus should be carried as an asset in the head office, but not for the enterprise as a whole. So this current account is going to represent an investment that I've made in my branch, and therefore this investment, you'll find that it is an asset to the head office, but not to the enterprise as a whole. So that is what we should have in mind. Then we have another account known as what? Branch, or rather head office current account. So remember here, we are saying that at this point, we are talking of a branch current account. We've talked of 2 accounts. That is branch current account. And this branch current account, we've said, is going to be maintained by the head office. This is going to be maintained by the head office. And this one represents an investment to the branch. It represents an investment to the branch. It represents an investment to the branch. And therefore, it is treated as what? As an asset to the head office and not to the enterprise as a whole. That is number 1 account that you're going to maintain, which you're terming it as branch current account. Amongst also our other current account, this is what you're terming it as what? Head office current account. Head office current account. Head office current account. Also, it will be very vital for us to understand what head office current account is. So anytime you're talking about head office current account, my good students, we are looking at an account balance. The head office current account balance represents the amount of branch, represents the amount the branch owes the head office. Represent the amount the branch owes the head office. That should be carried as a liability of the branch, but not for the enterprise as a whole. So this is what we are saying, my good students. Anytime you're looking at head office current account, first of all, you should understand that it is maintained by the branch. It is maintained by the branch. And this account represents a liability to the head office, meaning that this is what we are owing the head office. This is what we are owing the head office. This is what we are owing the head office. So therefore, you'll find that it is a liability to the branch, that it is a liability, of course, to the branch, meaning that this is what you are owing, this is what you are owing the head office, but not the enterprise, but not the enterprise as a whole, but not the enterprise as a whole. So these are the common accounts that we'll be looking at. Anytime we are looking at, anytime we'll be talking about the aspect to do with independent branches, my good students will find that this will be very vital. The books to be maintained will be very, very vital. Now, after you've talked of that, I want us to look at the journal entries that we should be having. I want us to talk about the journal entries that we'll be maintaining. I want us to talk about the journal entries that we'll be maintaining anytime we are looking at what? Anytime we are looking at independent branches. So they should give us our journal entries, meaning that we are going to look at it in true perspective. What should be maintained by the head office and what should be maintained by the branch. So, considering our journal entries, my good students, considering our journal entries, we are saying that we're going to look at it in two perspectives, right? We're going to look at it on the side of the head office and also on the side of the branch. So, in this case, we will be talking about books of the head office here. Look at the books that are going to be maintained by the head office. So, books of the head office, HO, and you'll be looking at books of the branch. Books at the branch. Books at the branch. So, books of the branch. Books of the branch. So, now us to understand this key element here. I want us to understand this case. So the first case, let us start by looking at when we are sending the goods to the head office, or rather when we are sending the goods to the branch, what will we be having? So talk about goods sent to the branch. Here we'll be having, number one, talk about this is goods sent to the branch. And here we'll be looking at books, or rather goods received from the head office. Goods received from the head office. We'll be talking of goods received from the head office. So this is our entry number one. So anytime you are sending our goods to the head office or to the branch, this is what you are going to do. We are going to debit where I'm sending these goods. So we are going to debit our branch current account. We are going to debit our branch current account. And of course, we are going to credit our goods sent to branch account. Goods sent to branch account. Goods sent to branch account. This stands for goods sent to branch account. This time, you'll find that the branch has received these goods, right? So goods received from the head office, this is now in the books of the branch. We are going to debit, of course, our goods sent to branch account. So debit, goods sent to branch account, goods sent to branch account, goods sent to branch account. Sorry. In this case, you're going to, remember you're looking at goods received. We're looking at goods received. So in that case, we are saying that you're going to debit our head office. We are going to debit our goods received account. Goods received account, because remember you're receiving, right? And of course, you're going to credit we are going to credit our head office current account. Head office current account. From the word go, we mentioned that I am maintaining this account. The head office current account will act as a liability account in the branch, whereas the branch current account will act as an asset account in the head office. So that is our first entry, my good students. Number two entry Considering, number 2 entry, consider goods returned to the head office. Goods, talk about goods returned to head office. Goods returned to head office. Whereas on this other case, we'll be looking at goods returned, return of goods to head office. Return of goods, still the same too. Goods returns to head office. Goods returned to HO. Of course, by the branch. This is what you are going to do. This is what you are going to do. I am returning the goods. Initially, we had taken these goods. So just a moment here. Initially, remember, we had taken these goods. Meaning that we had received these goods from the head office. And now what is happening? I am returning these goods, probably due to spoilage, or maybe in that case, it was not what you wanted. And if that happens, this is what you're going to do. So just a moment. Okay. So if that happens, this will be our entries. We are going to debit under goods returned. It will be the opposite, right? We are going to debit our goods sent to branch account. Goods sent to branch account. And you are going to credit our branch current account. I want you to mark it very well. Whereas on this other side, it will be the opposite again, whereby we are going to debit our head office current account. I'm returning the goods. So debit head office current account, and we are going to credit our goods received account. That will be the entry that we are going to consider when goods have been returned. Okay? Now, consider the next bit, my good students. Consider the next point, whereby we'll be talking of. So just a moment here. Okay. So consider the next point, where we'll be looking at cash received from branch. Number 3. This is cash received from branch. Okay? And here we'll be talking about cash remitted to HO. Cash remitted to head office. So in the event that we have received cash from branch, in this case, we are talking about cash received from branch. I am going to debit our cash book account, and we are going to credit. They are coming from branch, so we are going to credit our branch current account. We are going to debit, we are going to credit our branch current account. Remember, that is in the head office, right? Now, on the side of the branch, we are remitting our cash to the head office. And if we are remitting our cash to the head office, that means that we are going to debit our head office current account. We are going to debit our HO current account. And we are going to credit where our cash is coming from. So cash account, cash book account, cash book account. So that is what we need to do. Then the next entry, my good students, to consider, this will be the case. Number 4, I want us to talk about the following. Number 4, we will talk about, in this case, cash remitted to branch. We've talked of cash received from branch and cash remitted to head office. Now, talk about cash remitted to branch. We are now giving this branch the cash. So cash remitted to branch. So cash remitted to branch. Cash remitted to branch. And we'll be talking about here cash received from head office. Cash received from head office. So this will be our entry, my good students. We are going to debit. We are going to debit. That is a cash remitted. So we are going to debit our branch current account. Branch current account. And of course, where the cash is coming from, we are going to credit that. So talk about cash account. Then on this side of the head, on the side of the branch, this is what you're going to do. They have received this cash. And therefore, if they have received the cash from the head office, we are going to debit our cash account. We are going to debit our cash account. And of course, we are going to credit our head office current account. We are going to credit our head office current account. We are going to credit our head office current account. So that was our entry number 1, 2. So let us have 1, 2, 3, 4. So we are talking of entry number 5. So we are talking of entry number 5. Our entry number 5 will be what, my good students? In that case, we can talk about branch expenses paid by head office. Branch expenses. Branch expenses paid by HO. Paid by HO. Paid by HO. So branch expenses paid by HO on both sides. This is what we'll be looking at. So on the side of the head office, I am paying these expenses. I'm paying these expenses, branch expenses paid by the HO. So therefore, we are going to debit our branch current account. And of course, we are going to credit, in this case, of course, we are going to credit our cash book account. Cash account. What about on the side of the head, on the side of the branch? What are we going to do? On the side of the branch, in the event that I've paid these expenses, you'll find that I'm going to debit. This is on the side of the branch. This is on the side of the branch. So this is the side of the branch. Branch expenses paid, I'm going to debit. Branch expenses paid, we're going to debit our P&L account. P&L account, because that is a kind of an expense to the whole company as a whole. And we're going to credit, of course, we know very well right now the account that we're going to credit, right? We are going to credit our head office current account. Head office current account. Head office current account. Head office current account. So that is what you must consider. That is what you must consider on the first case. Then consider the next entry. Again, here we are looking at books of HO and books of branch. So talk of books of head office, and we are looking at books of the branch. Books of the branch. So looking at that case, now what if these are expenses are paid by the branch? Head office expenses paid by the branch. So let us look at number 6. Head office expenses paid by the branch. 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 So talk about head office, HO expenses paid by the branch. Paid by the branch. This is on both sides. This is on both sides. So on the side of the head office, we are going to debit our P&L account or appropriation account. And in that case, we are going to credit our branch current account. Branch current account. What about on the side of the branch? On the side of the branch, we are going to debit our head office current account, and we are going to credit our cash book account. Cash account. Very key to consider, very key to consider. Then the next entry will be what? The next entry that should give us entry number 7. We will be talking about this entry, which is also very key. We will be looking at branch creditor, or rather talk of branch creditors paid by head office. Branch creditors paid by head office. Or rather, in this case, branch creditors paid by the head office. 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 So this is what you are going to do. We are going to debit and we are going to credit the following. We are going to debit branch creditors. We are going to debit our branch current account here. Branch current account. And of course, I'm going to credit where our cash is coming from. So we credit our cash account. Whereas on the books of the branch, this is what you are going to consider. We are going to talk about we are going to debit our creditors account. That we are going to debit our current head office. Talk about this is we are going to debit our creditors account, branch creditors paid. So we're going to debit our creditors account because we are reducing our liabilities, creditors account, and we are going to credit if the head office has paid for us. We are going to credit our head office current account. Head office current account. It's as if I've created a debt with the head office. It's as if we've created a debt with the head office. That is another entry that you must always have at the back of our mind. Consider our entry number 8. Consider our entry number 8. Entry number 8, we will be looking at head office creditors paid by branch. Head office creditors paid by branch. Head office creditors paid by branch. Head office creditors paid by the branch. In the event that you'll find that it is the branch which is paying for the head office, their creditors, what are we going to consider? Our double entry or our journal entries will be, we are going to debit and we are going to credit, meaning that head office creditors paid by the branch. In the books of the head office, we are going to talk about in the books of the head office, we are going to talk of creditors account. Creditors account, and we are going to credit our branch current account. So as you can clearly see here, you'll find that actually just the opposite of each other, right? Just the opposite of each other, meaning that I know very well you can know what you're going to debit here and what you're going to credit here, right? So meaning that here we're going to debit our head office current account, HO current account, and we are going to credit our cash account. We're going to credit our cash account. We're going to credit our cash account. Then the next entry, my good students, consider, that should be entry number 9. This is what you are going to do. In this case, we are going to record branch data paying direct to head office. Branch data paying direct to the head office. Branch data. Branch data paying direct to the head office. Paying direct to HO. paying direct to the head office. Branch debtor paying direct to the head office. In this event, this is what you're going to do. We are going to debit, of course. We are going to debit on the side of in the books of the head office, you're going to debit. The cash has come in. So debit our cash account. And we credit our branch current account. Branch current account. That is very key for us to note. What about on the books of the branch? In the books of the branch, this is what we are going to do. We are going to talk about debit, head office, current account, because my liability has been reduced. Then we are going to credit our debtors account. In this case, we are going to credit our debtors account. They have reduced their liability. Debtors account. So the moment you've mastered one entry, that's a duty. What is happening in the head office, it will be the opposite as what is happening in the branch. So the moment you grasp these entries, you'll find that it will be very easy and also swift for us. Then talk about number 10, entry to consider. Number 10, head office debtor paying direct to branch. HO debtor paying directly, HO debtor paying direct to the branch. The opposite of what we've mentioned above there. So this is what you're going to do. We are going to debit. We are going to debit our cash book account. So here we are looking at talk of head office debtor paying direct to branch. We are going to debit our cash book account and debit our branch current account. So we are saying that we are going to debit, of course, on the side of the head office, debit our branch current account is just the opposite. What you are doing here, right? Just the opposite here. So we are talking of, we debit our branch current account. So debit our branch current account. Branch current account. And of course, we are going to credit our debtors account. And on the side of the branch, these are the entities that the branch will consider. So on the side of the branch, we are going to credit, or rather we are going to debit our cash book account, because we are receiving that case, cash account. And of course, we are going to credit our head office current account, because I'll be owing them as at the end of the day. I am receiving this amount on their behalf. So it as if head office will be it as if we'll be owing the head office, okay? Then talk about the other bit, to transfer profit. In this case, talk about profit transfer, right? Talk about profit transfer. Talk about profit transfer. Because you'll find that as at the end of the financial period, the branch profit or loss should be transferred to the head office books. As at the end of the day, I must transfer the head office, or rather I must transfer the branch profits to the head office, So in this case, talk about to transfer branch profit, to transfer branch profit, to transfer branch profit, to transfer branch profit, because as at the end of the day, we just have to transfer this profit. Because I'm transferring from branch to the head office, because we said they are going to be reported as one. They are going to be reported as one. So we are going to debit our, on the side of the head office, we're going to debit our branch current account, branch current account, and we are going to credit our head office current account. We are going to credit our head office current account. Head office current account. And on the side of the branch, this is what you are going to do. That is, we are going to credit branch current account, not we are going to credit branch current account. We've debited our branch current account. We've debited our branch current account and credit our HO current account. Correct? Then on the side of in the books of the branch, this is what you are going to do. In the books of the branch, we are going to debit our income statement. Debiting income statement meaning that we are removing it, and we are going to credit our HO current account. So these are the double entries that any time you are talking about independent branches, make sure that at least you are aware of all these entries. You are aware of these entries that Mwalimu has showed us today. After looking at that case, my good students will find that many a times you'll find that probably our head office current account and branch current account, maybe they will not balance. And they will not balance simply because of the main reason being what? Errors probably made when recording. Talk about goods in transit. Maybe you can talk about cash in transit. These are some of the errors that might lead us that might lead our books not to what? Not to reconcile. And as such case, how are we going to treat such? In the event that maybe I'm having cash in transit, and when you have, say, like goods in transit, this is what you are going to do. For the purpose of recording our cash in transit, we are going to debit cash in transit account, and we debit our head office current account. I want you to listen here very carefully. You are saying that in the event that you want to record, say, like goods in transit, in the books of the branch, we are going to debit our goods in transit account, and we credit our head office current account. Whereas in the books of the head office, we are going to debit our goods in transit account, and we are going to credit our branch current account, because these cash or goods in transit cannot be recorded on the two accounts at the same time, simply because one account will be recorded and the other account won't be recorded because haijafika huko, it has not reached there. That's why we are talking of it being in one account. So that is on the side of goods in transit. That will also happen with cash in transit. In the books of the branch accounts, we are going to debit our cash in transit account and credit head office current account, whereas in the books of the head office, we are going to debit cash in transit and we credit what? Branch current account. So these are what we should always be having at the back of our mind, my good student, always when you are dealing with the aspect of the journal entries. And maybe to do a summary of everything on this, I want us to look at the concept of assets. Non-current assets. Anytime, we will always be looking at the policy of the company for non-current asset. And if it is a policy of the company that head office should be maintaining the non-current accounts, you'll find that branch will not maintain at all costs. Branch will not maintain the non-current assets. And therefore, when such happens, what will be our entries to consider? In this case, you are looking at it in a case whereby we have purchased our non-current assets. We have purchased our non-current assets. In the event that we purchased our non-current assets, my good students, this will be our entry. So you'll find that when branch, probably in this case, when branch has acquired a non-current asset, and it is a policy of the firm that this account should be maintained by the head office, this will be our entries to consider. Number one, on purchase on purchase of fixed asset, on purchase of fixed asset, on purchase of fixed asset, we are going to debit our head office current account, that is in the branch accounts, on purchase of fixed assets, on branch accounts, or rather on branch, we are going to debit our head office current account, and you are going to credit the cash book account. What about in the books of HO? In the books of head office, we are going to debit our asset account because that is where it is being maintained, and you are going, of course, to credit our branch current account. Branch current account. So you will note here the key element is that head office, or rather branch, are not maintaining the asset account. The asset account is being maintained by the head office, and that's why on acquisition, yes, it is the branch which has purchased this asset, and that's why at this point it is as if I'm purchasing on behalf of the head office. So you are going to debit our head office current account and you credit our cash book account. Now, of course, on that case, in the books of the head office, they are going now to record that asset account and therefore crediting the branch account, meaning that it is as if, in this case, having it branches owing us, right? So the moment you do have that case, what about on depreciation, recording depreciation on the same? What will we be required to do? To record depreciation on this, to record depreciation on this, to record depreciation, to record depreciation, to record depreciation. Looking at it in the books of the branch. In the books of the branch, we are going to debit and of course consider crediting. In the books of the branch, we are going to debit our depreciation expense account, and we are going to credit our HO current account, head office current account. What about in the books of head office? In the books of head office, my good students, we are going to debit. Of course, this should give us our branch current account, and we are going to credit our provision for depreciation account, So these are the entries that you must always consider, meaning that the next class we can start a question very comfortably. We can look at a question very comfortably. So to this point, my good students, thank you so much, and let us meet in the next session whereby we are going to consider a question of the same. Thank you.